You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. For more information, please visit ftserussell.com, cboe.com, and cmegroup.com. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody. That music means it is Thursday. It is 1:30 p.m. Central, 2:30 p.m. Eastern Time once again for TWIFO, This Week in Futures Options, a program where we break down all the action in the futures options over there at CME Group. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-exciting, at least we hope so, Options Insider Radio Network. Reminding all of you out there, if you like what you hear, this show, any show we do here, I noticed our content the other day up there on Audible, amongst all the great classic works of literature. So if you need a respite from your audiobooks, you want to listen to some podcasts, we're up there as well. It's pretty much available on every major outlet. So wherever you get our content, make sure you keep rating and reviewing. It really does help the legion of new folks who are discovering the world of options and now perhaps graduating to futures options. Helps them to discover the program. Keep those questions and comments coming too. We do love to hear from all of you guys and gals out there. And let's see who we're hearing from on the old TWIFO program today. I am pleased to be joined once again by my old friend, Mr. Sean Smith, the Managing Director of Derivatives Licensing over there at FTSE Russell, beaming in from the ever scintillating FTSE Russell studios. Mr. Smith, welcome back to the program, sir.
Hi, Mark. It's great to be here, and I'm looking forward to a great show today.
How are things in the FTSE Russell studios this week, sir?
They are good. They're quiet. You know, it's been a good week. The week's not over. We've got today. We've got tomorrow. Markets are moving. Our clients are trading. It's all good.
It does seem like it's all good because it seems like the worm is turning out there in the broad markets. Let's get to all of that, but let's kick it off the way we always do with our movers and shakers report.
It's time to find out what's rallying on the light side and falling to the dark side at CME Group this week. It's time for the Movers and Shakers Report.
All right, everybody. Time for the Movers and Shakers, the portion of the show we break down all the action to the upside and to the dark side, a.k.a. well, the upside and to the downside, a.k.a. the light side and the dark side over there at CME Group this week. Mr. Sean, you know what I'm going to ask you next. You know how this story starts. Where should we begin our journey today, sir?
We're going light side.
An excellent choice, sir, because once again, we have mostly green on the screen. I'm looking here, listeners. We could see, let's see, 1, 2, 3, 4, 5, 6. You can do 6 clear downside. If you really stretch it, you can get out to pretty much a bottom 10 or so. But that's pretty much about it for red. And I use the term red loosely on some of those latter ones. It's pretty much all green all the time this week. So to the light side we go. You know, it's a crazy week when Bitcoin isn't even in there because it's only moving 1.6%. That's not enough to break into the top 5 this week. The E-mini Russell also had a crazy week as well, up 3.14%. Even that's not enough to break into the top 5. That only gets it to number 12. So let's see what actually is in our top 5. It cost you almost 5.5% movement this week, listeners, to break into our top 5. That gets you to Nat Gas, up 5.46%. Once again, Nat Gas rocking and rolling. If it's a day that ends in Y, it seems like Nat Gas is moving, lumber is moving, a few others out there. These days, ags are moving as well. Let's see what else is lighting up our top 5 here. Number 4, RBOB, up almost 5.75%, 5.71%. It was number 4 in the other direction last week, off 3.88%. Number 3, back to the ags. It's corn, up 6.07%. Number 2 in the same direction last week, up almost 7.6%. So a good couple of weeks for corn. Number 2, it's that big dog lumber, up exactly 7% this week. This has kind of been an interesting tale to watch. I know a lot of you have lumber on the brain, but it's a hard one to parse on the show for reasons I think I'll make clear in a little bit. And then number 1 to the upside this week on a very upside heavy week, it's soybean oil taking the crown this week, up just a tick under 8%. 7.97%. It was number 1, if you recall, last week as well, up 12, almost 12.5%. So you're talking a 20+% run just in the last couple of weeks. So a lot of green on the screen for the beans, in particular soybean oil. Let's go to the dark side now. Like I said, we had to kind of scramble to really put together a bottom 5 out here. Looks like we've got number 5 on the bottom 5. A lot of rates here. 30-year off 1.08%. See, we're talking about 1%. Number 4, Eurodollars off 1.4%. Number 3, rough rice off 1.5%. Number 2 is the Ultra Bond off 1.66%. And number 1 with a very small, not even a 22 count, it's more of a BB, a pellet to the dark side, is oats off 1.8%. All right, let's look now. Let's break it down from a vol moving and shaking perspective. We've got the top vol movers and shakers. You guys can find these over there at the Bantix site. If you're on the premium side, you can get access to all this data. Otherwise, listen to us. We'll break it down for you here. Let's go to the vol decliners first, the top 10 vol decliners this week. Number 1, we've got lumber off 60-day lumber off 4.25%. Number 2, the Bitcoin 30-day, so the 30-day front month contract, the vol off 3.85%. And the soybean meal front contract, 30-day contract, off 3.6%. Let's go to the vol advancers now. Let's start at the bottom. Number 3 here, it's the peso. I don't talk the peso that often. The 90-day peso contract, vols up 3.15%. And then number 2, we've got the Chicago wheat 30-day contract up 4.75%. And then lumber, once again, lumber 90-day up nearly 5%, 4.9%. So Sean, I can see you're intrigued by lumber. A bunch of our listeners are as well. I'm just going to cheat and bump a couple of people up here from the feedback segment, Sean. First off, we got Neil B saying, can we get some lumber on TWIFO? And then a question from Jack. He says, thank you for your fantastic network. Well, you're welcome, Jack. He says, I'm very curious about the situation in lumber right now. Any insight would be appreciated. I don't know, Sean. Should we try to give the people what they want, even though there's not a lot really there? Should we try to give the folks a little bit of lumber love?
You know, I got to tell you, I'm in the midst of trying to refence my yard, and the price to refence my yard has doubled since I last put a fence up in my backyard, and it's only been a few years. What is going on with lumber? It's my big question.
Well,
so I think our listeners are due some lumber chat here.
All
so
right.
Absolutely.
A little bit of lumber, I guess. We'll see what we can do. If you go to, it's actually there. It's in the softs, listener. So we'll have to go find it in the ags.
It's time to get our hands dirty exploring the latest options, trades, and trends in corn, wheat, soybeans, and more. It's time to talk ags.
All right, listeners, let's do it. Let's try it. This is actually a pretty active week for lumber, and I use active in air quotes, listeners, because unfortunately, there's not a heck of a lot. If you want to find it for yourselves, go to the TWIFO report, of course. That's where you can find all the stuff we talk about, the SKU, the vol, all the changes, all that stuff. It's in the TWIFO report, so you can find them for yourselves. CMEgroup.com/TWIFO or CMEgroup.com/TWIO, TWIO. Both should work. Both should get you to where we're hanging out right now. Then from there, go to the ags drop down, and then scroll down to the softs section. Not a section we talk about a lot. There's only one thing in there. It's lumber. Click on that, and you'll see exactly what I'm talking about right now. And you're right, Sean. Lumber has been on the tier. I'm hearing stories about some of the hot real estate markets, like down in Florida, having to actually pause construction because the builders, by the time they sell the house versus actually getting the wood they need to build it, the prices have gone up so much they're losing money on the house. So they're just refusing to sell new houses right now. So craziness afoot out there in the world of lumber. It's not just Sean's fence, listeners. A lot of craziness going on out there. Coming into showtime right now, lumber $1,454.3, $1,454.30. That's up 81.8 handles from the start of this week, up nearly 6% yet again. If you're wondering what the vol is, remember, that was one of our big vol movers and shakers this week was lumber. Right, we had the lumber 60-day, weird kind of bifurcation. The 60-day contract was declining 4.25%. The 90-day contract was up 4.9%. But again, that's also a little bit of a reflection of some of the aberrant and scattershot paper we're seeing out here. The contract right now that has 1 day to go, that's that May contract, that is a 54 vol. Let's go a little bit farther out. Let's go out to June. That has 29 days to go. That contract is a 68 vol, listener. So lumber has certainly been delivering on the vol perspective. It's hard to parse the SKU, though, in some of these months where there's only 3 contracts trading. Because right now, listeners, only 200 contracts on the tape. This is a super active week for lumber. Let me just put the caveat out there. And it's still only 200 contracts. This is why lumber, even though it moves a lot, doesn't really make it on our show that often because the options paper just isn't there. Like for this June contract, there were 3 contracts this week. And then let's go out to July. You got 18. So I guess we'll have to go out to September because 56% of this 200 contracts, 112 to be precise, of these contracts went up in the May contract that's going out tomorrow. So we can look at that really quickly. It was 14 half puts where all the action was, listeners. That was a little bit out of the money puts, doing a whopping 24. Followed by the 1,400 puts doing 22. All of those opening earlier this week, which is kind of interesting given the fact that this contract is going the way of the dodo pretty soon. Doesn't seem like the 1,400 and 14 half puts will be making it. Also saw 1,480 puts, a little bit beefier, going up a whopping 17 times this week. Let's go out to September. It's a little bit more longer term contract. They did a whopping 67 contracts this week here. So the vol out there, 77.2, up about 2.3 points. Let's go to the SKU out there. It puts 20.6% cheap last week. This week, 23.2% cheap. So the puts getting annihilated out here. Calls 17.1% rich last week, 17.4% rich this week. That seems to be the most aggressive of the put SKUs out here this week, unless you go all the way out to November. November, the puts are 22.4% cheap right now. So I guess if you had the temerity to want to put in lumber, it's a fire sale right now because this thing seems to go nothing but up these days. So there you go, Sean. That's as much parsing as we could do in lumber, the whopping 200 contracts that went up this week. I wish there was more, Sean, but unfortunately, I can't break down more than that for your fence, sir.
That's okay. It's good to hear. It's good to hear all the information. It's just really interesting just to see how the world is continuing to operate with lumber at such prices. So it's one of those economic numbers that are affecting. I'm sorry, it's one of those numbers that are affecting the economy. Is the point I wanted to make.
We'll have a new segment. We'll call it Fence Watch, and we'll have the
Fence Watch.
What's going on with Sean's fence outside the FTSE Russell Steel? Has the fence been built? Has lumber come down enough to make the fence economically viable? Our listeners want to know, Sean.
We'll keep updating on the Fence Watch.
There we go. We'll put it out throughout the show. Hashtag Fence Watch. As we keep on rolling into an area that's more up Sean's alley outside of the fence, it's time to talk all the craziness that's going on in equities.
It's time to explore the volatility swings, skew changes, and hot options trades in your favorite indices. It's time to talk equities.
All right, everybody, welcome to the equities segment. A lot to parse out here this week. Coming in today, Sean, was a weird one, a hot and heavy, because this is, of course, in equities land. This is one of the big weeks of the cycle. This is the big earnings week. A lot of hot names are popping off this week. Tesla, we had Apple, we had Microsoft, we had Facebook, aka names you folks like to trade options on. And most of them pretty much blew the cover off the ball when they were out there just crushing it. A couple of exceptions being like Ford. And even Ford looked pretty good from a net revenue perspective. It was just the chip shortage going to cause some issues with them. So most of those names are looking pretty strong. And then coming into today, at least from an announcement perspective, they had announced great earnings. And then coming into today, the market was kind of shrugging its shoulders, actually selling off in the NASDAQ. It seemed like maybe some folks thought this was not sustainable. These absurd levels of revenue growth were not really viable beyond the pandemic. Maybe they're concerned about what's going on overseas. Either way, the market was not really feeling it today. And yet now, kicking off the show, Sean, I think we've talked the markets back up because the worm seems to have turned. Most of the major indices are back up firmly in the green. Looks like S&P leading the charge up about 0.75% out there. I mean, it's coming into showtime. We got vol a little bit lower than it was this time last week. RVX, a.k.a. the VIX of small caps, at about 23, almost exactly. Puts it down about 4.5 points from last show. That's a long way below, Sean, where it was not too long ago where we kept saying, man, can it ever break 30 to the downside? Well, it has, and it's hanging out at a 23 right now. VIX coming into showtime a little bit shy of 17.5, about 17.4 or so. Puts it down almost 2.5 points from where it was last show. Hit nearly 19 today, though. Had a bit of a pop earlier this morning. It seems like there's a little bit of a vol scramble earlier in the session today, which was kind of interesting to watch out there. VVIX, a.k.a. the vol of vol. Pretty frothy. Vol's moving, so right around a 105 right now. That's still down, though, from the heights it hit last week. It's down about 14.3 points from where it was this time last week. We were north or right around the 120 level when things were really popping off on the show last week. And Vol Q, a.k.a. the at-the-money vol of the NASDAQ 100, a little bit shy of 20, about 1985. It's kind of been glued to right around that 20 handle for the better part of the last few weeks, and it's kind of hanging out there. Yet again, that puts that VIX to RVX spread, so the small cap to large cap vol spread at about 5.6, a little bit more than 2 points tighter than it was this time last week. A lot of that seems to be on RVX coming in a little bit, pretty aggressively actually, versus VIX kind of vacillating still around that 17.5 level. So RVX coming in, that's tightening that spread a little bit. We all know small caps should be structurally more volatile than large caps. So when that comes in a little bit, that spread's going to tighten. VIX to Vol Q, so the S&P 500 to the NASDAQ Vol, right around 2.5. That's about 0.25 point wider. Not much change there on the VIX to Vol Q front. So, Sean, a lot popping off in the world of small caps today. I noticed out there in some of the other flavors we analyzed in small caps like IWM, they had already blown through their ADV by the time we got to our option block show a couple of hours ago. So small caps are putting up the numbers, and it's been an action-packed week. What's been lighting up your tape out there this week from a small cap perspective, sir?
You know, we talk about this probably almost every show, Mark, and that is how the small caps, the Russell 2000 is a domestic index based, and it's the U.S. economy, right? It's U.S. stocks in this index, the Russell 2000. The news coming out is good across the board. GDP was good. So, you not only have earnings numbers, which are showing strength, but you've got the economic data behind it that the economy is, I hate to use the word roaring back, but the economy is showing some pretty good strength currently. So with that strength comes less fear, less volatility. So as the markets rally, without the economic concerns of COVID, et cetera, Fed stimulus, good economic data coming out, less jobless claims, all indicating the U.S. economy is coming back. That takes the fear out, that takes volatility out as the markets rally. We had that call buying scenario, which kept vol in RVX up. I didn't know how long that upside volatility was going to last because, as we know, historically, volatility comes in as markets rally. So I'm not surprised to see this volatility lower. But again, Russell is a very interesting index, the Russell 2000. So keep your eyes on this vol as it comes in here. 23 is still above large caps, but it has the tendency to pop. As I have always said, the upside outperformance happens in small caps, but the downside outperformance happens as well. So we've had our seatbelts on during this entire ride. I strongly recommend you just stay buckled up.
Stay buckled up indeed. Let's see what people are buckling into out there in the world of all things small cap. Remember, for a while now, the narrative has been small delta calls here in Russell 2000. Let's see if that's the narrative again today. Coming into showtime, we're at a 22.93, up about 24 points or about 1.06% net on the week. Listeners, once again, as it is and always in the equities, the contract going away in one day has 39% of the paper out here this week. Let's go a little bit farther out. Let's go out to the week 3 May contract. That's got about 22 days to go. That's where a lot of action's going up out there as well. About 17% of the paper. Seems like 23.85s or 23 halves going out tomorrow are the order of the day. That's where most of the action was this week. So I wouldn't quite exactly call those, well, they are technically small delta calls now because they're going away in a day. So it doesn't seem like we're getting to 23 half by tomorrow, but hey, crazier things have happened. So I guess technically if you want to call those small delta calls, that is just by virtue of attrition and decay, then yes, those are pretty active all week, actually. The 23 half strike was kind of trading all week and most of it opening. So including still trading today. So people are liking 23 halves going out tomorrow. Let's go a little bit farther out. 23.85 is a little bit farther up the chain. Also pretty active this week. That's in the week 3 April contract. By the way, the vol out here, before I get ahead of myself, the vol in that contract going away tomorrow, about a 25, up nearly 3 points. Let's get out to a little bit saner contract. Let's go out to the week 3 contract that has 22 days to go. That vol, 22.75, kind of unched this week, which is interesting. So the vol, again, similar to what we were talking about in RBX, right around that 23 level out there. In terms of skew, the puts last week, 14.3% rich. This week, getting a little bit richer, 16.8, so almost 17% bid on the puts. Calls, 11.5% cheap. This week, 12.7% cheap. Remember, listeners, we broke this down before. When you see the uppercase letter next to the numbers there, then, of course, that means you're seeing a premium. If you're seeing a lowercase letter next to the number, then you're seeing a discount. So just keep that in mind when you're looking at this. Let's go a little bit farther out because longer-term upside has been active, too. Let's see, 2500s were trading this week out here in September. So that's a little bit longer term and a little bit farther out. Not quite as crazy upside, but, underlying has rallied a bit since we were talking about those 24 halves. Those are not exactly as outlandish as they would have been a few weeks ago. So I guess maybe 2500, Sean, is the new 24 half strike out there. I think that's what we're seeing out there as well. Just folks continue to pile into upside. It was 23 halves. Those are going out tomorrow. And now we used to talk about 24 halves, but the index has rallied. So apparently, Sean, folks have now migrated to the 2500s and say a little bit more even strike. Maybe that's easier for them to wrap their heads around, sir.
Yep. Interesting times. And it's not surprising to see this call buying continue. You've got both sides of that trade, right? So you've got call buyers and you've got volatility harvesters. So Both are taking advantage of the price and the volatility. So it's as I've always said, Russell 2000 will always be that interesting trade for our listeners.
It will be indeed. You know what else is always interesting and lighting up again this week is energy. So let's get to it.
It's time to tap into the deep options well of black gold, Texas tea, nat gas, and more. It's time to talk energy.
All right, everybody, welcome to the energy, the portion of the show where we get out there, get our hands dirty, talking about some black gold, some Texas tea. Today, a little bit different. We have a couple of energy names lighting up our upside. Number 5 is nat gas. Number 4, RBOB, both up around 5.5 to 5.75% on the week. A little bit more paper going up in nat gas than RBOB. So let's hang our hat out there. By the way, if you're wondering, nat gas, a little bit north of 250,000, about 268,000. That's actually kind of light for nat gas this week, but it's moving and shaking nonetheless. This is refreshing. 54.5% of the paper went up this week in the June contract. That has about 26 days to go, so we can parse it without having to worry about it going away tomorrow or something crazy like we see in most of the other products these days. Like I said, at about almost a little bit shy of the 3 handle, 290. So we've seen a nice little rebound out there in nat gas of late. If you're wondering what the vol is out here, 32.3. That's fairly reasonable given how much this thing actually moves around, up about 1.25 points this week. Skew-wise, 3.4% rich were the puts last week, 3.1% rich this week. So puts coming in a little bit, calls almost a full percent cheap, 0.9% cheap last week. This week, 2% cheap. So calls coming in, puts getting a little bit bid. Interesting as we kind of rally a little bit, maybe breaking through some of those strikes to the upside. And of course, you start to see usually in those scenarios, the skew kind of rotate a little bit. And it seems like that's what we're seeing out here in nat gas land. Of course, you folks can dive into that for yourselves here and the shifting and sliding tool that's available on the TWIFO report there as well. Check it out. Some cool videos explaining exactly what all that means if you are intrigued by the evolution of the skew in various products. Let's go out to what the hot thing is. Like I said, we're closing in on the 3 strikes, so I kind of expected some 3 calls to be the order of the day, and that does seem to be the case. 3 calls dominating the tape this week with about 17,600 contracts. The lion's share yesterday, 8,200, about 5,000 on Tuesday, 3,000 on Monday, 1,500 today. Looks like the 8,200 lot yesterday was actually a lot of back and forth. It's just slightly closing, so a lot of churn and burn on the 3 strike yesterday. We got close to it, came away from it. People getting excited, loading up, taking them off. Either way, a lot of back and forth paper on the 3 strike. It looks like most of the week, no real heavy bias except for Monday. About half the paper, half of that 3,000 contracts went up on Monday was opening. The rest of the week, kind of back and forth on that 3 strike, which again, that's a strike people are going to be drawn to. Pretty even number strike and a lot of paper going up there, a lot of back and forth paper. 3/4 also getting some love this week as well. Almost 15,000 contracts exactly going up this week. The big days were Wednesday, about almost 7,000, and Tuesday, about 6,200, going up 1,400 today, only a couple hundred on Monday. A little bit different on the 3/4, though. They're mostly opening on Tuesday and then mostly closing on Wednesday. So maybe expecting a little bit more action, and then when it didn't materialize, they came in and closed them on Wednesday. Either way, a little bit of back and forth paper throughout the week there, which is kind of interesting as well. It wasn't all calls all the time, though, listeners. The 2.5 puts, again, we weren't that far from 2.5 not that long ago. It seems a little bit distant now, but it wasn't that long ago we were threatening that level. Those did 11,600 contracts out there. The lion's share on Wednesday, nearly 5,000, 2,800 on Tuesday, 2,300 on Monday, 1,500 today. Again, back and forth. Monday was the only day had about 1,000 opening. The rest of the week was back and forth, slightly opening on both days. So it doesn't seem like there's any strong bias to any of this size paper we're seeing. That's a lot of back and forth, which again, this is a pretty active contract. It moves around quite a bit. So perhaps not entirely surprised, even though as we got closer to the 3 strike, I thought we might see more action coalescing around there. It seems like 3/4 were also the most active in July and out there in August as well, doing about 5,000 and 7,000 contracts respectively. Let's look out a little bit to see if we see any more aberrant paper. If 3 or 3/4 is not, it's not rich enough for your blood, it's not active, it's not optimistic enough. How about the 4 calls in September? Those were going up for a pretty decent clip. Nearly 7,000 of those went up this week. 5,001 went up yesterday. most of those opening. So opening on the 4 strike and 1,000 more today, and then 600 on Tuesday. So again, 6,600 of the 4 calls in September. Can we hit the 4 strike by that time? You know, we have moved quite a bit in this name. It is pretty volatile. If there was a name I was going to wager on to put on that much movement by September, you could do worse than Natgas. It certainly is a volatile name, but as we've also seen recently, it is prone to vacillating all over the place. But Natgas. Interesting. 4 strike by September. I'm going to keep an eye on those. What are your thoughts? Can Natgas? Well, I know we have some Natgas heads. Folks have written in the past with questions about Natgas. What are your thoughts on all this paper out here? Kind of a back and forth palooza. Not a lot of bias outside of those somewhat aberrant longer term calls out there. Interesting stuff. Nonetheless, out here, let's look really quickly what else we have lighting it up out here this week. We already did Natgas. We already stopped in ags really quickly, even though we just did lumber. I feel bad, so we kind of cheated the ags, folks. So let's go back really quickly to ags, listeners, because there's a couple of ags lighting it up this week. Soybean oil up nearly 8%, and we have corn up 6%. We did corn on the show recently. Let's go. We haven't had a chance, really, listeners, to get into the oil. We've done the beans a number of times. We don't really get a chance to do the meal or the oil really that much. And they do a fair amount of paper, 81,000 contracts on the tape this week for soybean oil. So it's no slouch. It's doing more than a lot of the metals and everything else out there. So let's dive into the oil because, hey, it's number 1 last week. It's number 1 this week. It deserves a little bit of respect. Coming into the showtime, soybean oil just a tick, just a hair under the 60 handle, 59.91. That's up about 1.13 points or almost 2% here on the week. If you're wondering what the vol is out there in that contract, that's the June contract, by the way. It has about 22 days to go. The vol out there is about a 38, up nearly 3 points. That's fairly rich for soybean oil. But then again, look at the moves the last couple of weeks. It's kind of hard to blame them out there. Looking at the skew, last week the puts were 2.4% cheap. Nobody really wanted the puts last week. This week, they really don't want them. They're almost 9% cheap, 8.7%. So they're coming for the puts pretty hard. Let's see if we can see some action in the calls as well. Yes, we did. Calls last week, 3.4% rich. This week, almost 9% rich. So it's, an aggressive, actual, crazy little skew going on out there in soybean oil. We have the calls, 9% almost rich, and the puts, 9% almost cheap. So interesting little skew lining up out there in that front month contract in soybean oil. Let's see what the hot print was out here this week. The most active contract. I said we're at about a 59.91, so we're threatening the 60 handle. So you might think, yeah, the 60s, right? And you would be correct. But they weren't in June. They were in July. 60 calls did about 6,300 contracts this week. None going up today. About 1,700 on Monday, 1,400 on Tuesday, 3,200 on Wednesday. All that closing. So it seems like as we got closer to the 60 strike, folks were getting the heck out of Dodge out there. Maybe they were overriders buying them back and closing. Either way, because the calls got aggressively bid here this week in June. So it seemed like there had to be some buying activity propping all that up. Beyond the 60 calls, the next most active contract was the 65s. Going up mostly yesterday, about 2,300, about half of that opening. So it looks like maybe some buying action on the 60s and 65s. Either way, some folks propping up this skew and bidding it up to high heaven here, nearly 9% rich on the call skew here in June. Let's look at some other interesting and or aberrant paper out here. Let's see. Double calls doing about 2,300 this week out here in Dees. Not so much. It's not like a metal or even a crude oil, listeners, where we see longer term kind of crazy paper lurking funky verticals and funky ratios and flies to the upside. It seems like it's mostly concentrated in those handful of months we talked about here. Let's look at any other really strange surprise prints. Not even a lot of puts on the paper here. You got to go all the way down to 58 puts doing 1,300 contracts, and the double puts, 55 puts here in July, actually doing 2,500, almost 2,600. The most active day was Tuesday with about 1,500 contracts on the tape, half of that opening. So a lot of back and forth paper here as well. But again, most of it lining up on the call side. Soybean meal, again, hard to argue. This underlying is up nearly 20%. course of the past couple of weeks. So not surprising they would line up there in the calls. And speaking of lining things up, Sean, we have a lot of listener questions looking for some interesting products they'd like us to parse. So I think let's squeeze some of them on, a little bit of their futures options feedback.
It's time for your questions, comments, and insights. It's time for Futures Options Feedback. Submit your questions at twitter.com/options, facebook.com/The Options Insider, stocktwits.com/Options Insider, or via questions@theoptionsinsider.com. You can also submit your feedback via our Options Insider Radio Network mobile app, available for iOS, Android, and Kindle Fire devices. You can even ask your questions live via our Mixlr chat room. So grab the Mixlr app or just search for Options Insider at Mixlr.com. That's MIXLR.com.
All right, let's get to it, listeners. You folks have a lot of products you want to see featured on the show. Let's start off here with LBAT. LBAT says, what's going on with the options on the far end of the yield curve? Thanks for the show. So he wants to go a little bit farther out on the yield curve here, Sean. He actually has good timing. Of course, we had the Fed coming in this week, not really doing a heck of a lot, but driving a little bit of paper, a little bit of action on the rates complex. In fact, 30 years breaking into our movers and shakers this week for the first time in a while. It hit number 5 to the dark side, off 1.08%. So let's dive out there really quick. Give our listener here a little bit of action in the rates.
The Fed, the yield curve, inflation fears. How are they impacting options activity and volatility in your favorite interest rate products? Let's find out as we explore the world of rates.
All right, let's get after it here. You know where to find the rates. You head on into that drop down, go down to interest rates, and then usually we hang out a little bit closer to the front portion of the yield curve, but he wants to go farther out. So we're going to go down to the 30-year, listeners. Once you head out there, you'll see that front contract at about a 157.05. This week, it's off about 0.75% so far. So getting back a little bit of what it lost over the course since our last show out there. And in terms of where the action is, by the way, about 250,000 contracts exactly on the tape right now. So pretty active contract, but it's kind of a light week in comparison for the 30 years out there. In terms of where the paper is lining up out here this week, listeners, 60.5%. So well over half coming in the June contract right now. Let's hang out in June for a little bit. Let's see what we've got going on out here. First off, the vol getting pretty light, 8.62 off 0.4%. Again, you can see the Fed kind of squeezing some of the juice out of the vol tree out here in the rates this week. So whatever vol they're pricing in, kind of coming back out off about half a point almost, or down to 8.62%. So that's pretty light vol. And then in terms of skew, we had the puts last week, 3.2% rich. This week, 3.6%. So puts getting a little bit bid. Calls, 1.8% cheap last week. This week, nearly 3%, 2.9% cheap. So calls coming in, puts getting a little bit bid. And of that 250,000 contracts roughly this week, the most active contract was the 160 calls out there in June, doing a little bit north of 17,000 contracts. The most active day was Tuesday, surprise, surprise, 8,700, followed by today with 4,000. Yesterday, 3,500, and 1,000 on Monday. And again, mostly back and forth on this strike. The Tuesday, nearly 9,000 contracts, only about 3,000 was opening. So slightly biased towards opening, but still interesting here. No, wasn't a great preponderance of one direction for the paper here on the 160s. Right behind it were the 155 puts. They did almost 16,000 contracts this week. Today is the most active day, about 7,500. 4,000 on Tuesday, 2,300 on Wednesday, and 1,900 on Monday. Again, a good chunk of that opening paper on Tuesday. The rest of the week, kind of back and forth. No real bias in any one direction. Also seeing the 154 puts pretty active in June this week. 15,000, about 200. This time, a little bit different. The most active day was Wednesday, not Tuesday, with nearly 9,000 going up, slightly biased towards opening, followed by almost 4,000 today, 1,700 on Tuesday, and about 1,000 on Monday. So the most active day on Wednesday, slightly biased towards opening the rest of the week. Not a heck of a lot of bias in either direction out there. Let's look if we see any crazy aberrant paper here before we roll off of the longer term rates. Let's see, 158s out here in July. Otherwise, it's a pretty standard week here. I forgot the name of the listener who asked this. It's a pretty standard week here. LBAT. Sean, I know you hung out a lot in the Eurodollars contract. Of course, those go out for a little bit. But I'm curious, did you ever hang your hats out there in the far end of the yield curve, a.k.a. the 30-year? And you have anything to add on that front for our listener here, Mr. or Mrs. LBAT?
No, but it's something that, those that trade the far end of the curve have always traded. There's, along that curve, there's always been the steepener trade, the flattening trade, but it's been such a flat yield curve. It's just really interesting and a great question from LBAT. But no, I never traded the far end of the curve. Euros went out 10 years. That was and I only traded the front 8 contracts and options on the front 8 when I was trading Eurodollars. So never went out further than that for me. It was always as the market has gone short dated options in excitement. I always stayed at the short end of the curve myself.
Yeah, it's interesting. That long end of the curve doesn't really make it on our top 5 movers and shakers that often, but it did this week. So Michaela, LBAT, you had a well-timed question. Next up, we have Michaela. People want all kinds of products on the show this week, Sean. We're trying to appease all of your demands here, listeners. Never let it be said that we don't listen to our audience. Michaela says, if there's time, can you squeeze in copper on the TWIFO program? Thank you very much for all that you do. Well, yes, we can, because you asked so nice, Michaela. So without further ado, let's dive on into the metals.
Werewolves beware. It's time to explore the options activity in silver, gold, and other shiny things. It's time to talk metals.
All right, welcome to the metals. This time, unlike what the man said, we're not going to talk silver or gold or even shiny things. We're going to go beyond those, listeners. You're going to go out to the drop down. You're going to go to the metals, skip over the precious, which is usually where we hang our hats, and go to the base metals. It sounds so pejorative to call them base metals, but that's where we're hanging our hat out there this week. Then we're going to copper. Copper doing some numbers this week, 34,000 contracts on the tape. When we first started this show, people would ask us about copper. There wasn't really a heck of a lot going on from an options perspective. That has certainly changed. This is actually a pretty decent amount of paper here for copper. Of course, copper has been active. A lot of the story of copper for the past few years, of course, has been inexorably tied to Chinese demand. As the Chinese economy looks good, drives copper demand. As China slows down, it crushes copper demand. So China very much a proxy for what's going on in the Chinese economy. There has been some interesting talk this week, I know, about a copper mine being taken over in China or by China in Africa out there. So that's, I think, raising some consternation from folks out there in the metals world. And that's driving a lot of interest in copper options and the underlying as well, up nearly 3.5% this week to 4.489 out there. So we're looking at right around the 4.5 strike, listeners. And of that 34,000 contracts, 63% of it came in that June contract that has about 26 days to go. So let's hang our hat out there. The vol, by the way, copper getting pretty juicy. We talk about metals vol, and usually gold and silver don't get that high usually. But you have copper right now at about a 27, up about 3.5 points in this June contract. So copper getting pretty frothy. In the past, when we have seen spikes in the precious metals, they tended to be pretty short-lived. This will be interesting to see if copper can maintain these vol levels for a while. In terms of skew, last week the puts 1.4% cheap. This week, 6.3% cheap. So the puts coming in. And the calls last week, 5.3% rich. This week, 4%. So the calls still bid, but a little bit less so from last week. Let's see what our Eye of Sauron found here from an activity perspective out here in copper. It looks like it was the 4 3/4 calls in June that led the dance this week with about 4,300 contracts. The most active day was today, actually. 2,200 contracts going up today. 1,800 yesterday, most of that opening yesterday. $1.70 on Tuesday, most of that opening. 43 on Monday, most of that opening. That latter is kind of what we used to expect out there in copper from an options volume perspective, but those numbers have obviously increased of late. I got to imagine maybe today's paper probably opening as well. So upside calls opening in copper. Go figure. The thing's moving like crazy. People are opening up some upside. Let's go beyond the 4 3/4 to see what else was lighting it up out here this week, listeners. Once you get beyond those, it's kind of a tie for the 5 calls, both in June and in July, both doing about 2,000 to 2,200 contracts each. So pretty much opening upside, the order of the day, listeners. We're rallying up to about the 4.5 strike already. People opening on the 4 3/4 strike in June and opening on the 5 calls in both June and July out here. That seems to be driving most of the paper. Let's look really quickly, see if we can see any other crazy prints out here. 5/2's doing a little bit of paper in December and in August, but outside of that, not a heck of a lot of crazy aberrant paper going up out there. 4 puts also getting a little bit of action out there in July, doing about 1,400 contracts. Most of that, 1,300 coming on Tuesday and all that opening. So opening 4 put as well. Not all calls. It's just mostly calls out here. So there you go, Michaela. Ask and you shall receive. Yes, we can squeeze in a little bit of copper for you here on the show. Sean, our listeners are so pleasant. They're so nice. It's kind of hard to say no to them. Don't you agree?
I could agree more. We have fantastic listeners, and it's one of the most exciting parts of doing the show with you, Mark, is responding to listeners, because they're why we're here. And it's just fantastic to have the conversation with them, the educating of them, answering their questions. There's excitement with our listeners. They really enjoy the show, and they really value what you bring to your listeners. So it's always fantastic to be on the show.
Speaking of listeners valuing us, Sean, I'm always telling people if they like what we do out there, keep rating and reviewing it in your platform of choice. We got a 5-star review here from Teals. I'm not sure what platform this is because there's so many out there that people are listening to our stuff on now. But Teals with a Z says, "Great show!" Exclamation point. So much knowledge, and the reports are truly informative. Thank you for devoting time to us ignored futures options traders. 5 stars. Well, thank you for that, Teals. I give that review a 5-star. That was great. Yeah, that's one of the reasons we launched this show. This market, this audience is almost criminally underserved from an analysis and information perspective. You can go out there, you can throw a penny, you can hit a bunch of people talking about Apple options or Tesla or SPY. Those are quite a few of them out there now, more so than when we launched this network 14 years ago. We were kind of the only game in town then. A few more have come around, but on the futures options side of the fence, not so much. It still is few and far between when it comes to good, reliable content sources for you folks out there. So we're happy to be one of those for you folks out there. We're happy you guys are enjoying it, Teals and everyone else out there. So, Sean, we have to say you were just giving some love to our listeners. Now our listeners giving it right back to you, Sean.
Fantastic. It's just great to have it.
It is great. I agree. I concur with that. Speaking of concurring, we had an interesting poll. We talked about it on the show last week. We now have the results, Sean. We could pay it off. Our listeners, I guess you could say they concurred, or maybe you could say they agreed to disagree, because this is one of the more equally distributed polls I think we've ever done in the history of the network. We asked them this time last week, Sean, what we thought was an easy one. Turned out not so much. We said quite simply, which of these 4 levels do you think we will hit first? And we gave them a broad spectrum. We gave them a VIX of 14, so equity vol of about 14, an S&P of 4,300, a Bitcoin of 70,000, or WTI going out to the crude oil land of 70. And Sean, when we first listed this poll, people were hot and heavy for Bitcoin. Bitcoin. Over half of the votes were for Bitcoin. As the poll went on for a couple of days, we saw that start to spread out a bit. And at one point, it was exactly 25% across the board for each. I don't think we've ever seen before, with a lot, usually maybe in the beginning of a poll when a couple of people have voted, but not a lot of people have really kind of weighed in. But the poll ended up, Sean, still almost exactly at that level. It was a hard one for our audience. They ended up going with VIX, but ever so slightly, a VIX of 14. So lower vol in the equity space at about a 26.3%, just north of 25. Then we have the S at a 4,300. So it was about 100 points and change north of where when we posted posted this last week. It's obviously the index has rallied a little bit since then. S&P at 4,300 was number 2, Sean, at 25.3%. Then we still had a tie for number 3 between Bitcoin at 70,000 and WTI at 70. Spoiler alert, I don't think I'm hitting any of those this week, at least. Both of those, Sean, at number 3 with 24.2%. That kind of surprised me. I was surprised that our audience was so evenly split. Did that surprise you as well, Sean, or is that kind of what you expected when we were talking about this poll last week?
You know, your listeners are going to probably remember. I think I said Bitcoin myself, and I think Bitcoin was in the lead at that point.
It was. When you said that, Bitcoin was running away with it. You're right.
It was.
You
right?
spooked them. You spooked them off of Bitcoin, sir.
I must have done something. But, you know, economic numbers keep coming out. They keep being strong. You know, the fear factor, the VIX is coming in. That's probably where people are kind of are obviously putting their votes, is seeing volatility continue to come in as things progress and things get better around here.
Well, hope you enjoyed that poll. Listeners, we have more for you guys to play over there at Options. Pretty much every week we got a fun poll for you guys to make your voices heard in. Unfortunately, that music means no more voices on this show, but of course, more content coming at you throughout the rest of this week. Friday, we got volatility views here on the network. So if you like all things vol, and clearly a lot of you voted for vol on our poll, come back here tomorrow, noon Central, 1 p.m. Eastern for vol views. But Sean, what a journey it has been on the show today. We hit on lumber. We never touched on that. It was kind of almost the mystery / hidden / surprise product show this week, because we had lumber, parsed that copper, never have that on the show, parsed that soybean oil on the show this week. Of course, we had equities. We got a little bit of energy with nat gas. So it was kind of all over the place, which is what I love. That's what TWIFO is all about. What's moving and shaking, surprise / mystery products on the show this week. I love it. So, of course, keep those questions coming. We love to hear from all of you. You guys drove a lot of the products that we talked about today. Keep that coming. Of course, if you like the show, any of the shows we do here on the network, keep rating and reviewing. It does help the new folks discover, as our listener termed it, these underserved / ignored futures options markets. And before we go, Sean, if folks are intrigued, they want to talk to you guys about upside small delta calls in the rut, maybe they want some analysis, some research about all things small cap, where should they go? What should they do, sir?
Well, the first place is FTSERussell.com. Our website is thorough, has fantastic information regarding, 1, our indexes, 2, what drives them, 3, we have our product specialists and our economists making comments. There's blogs in regards to why the market's moving the way it's moving, what's moving globally, what's moving domestically here in the U.S. in regards to small caps, large caps as well. FTSERussell.com is where you go. But if you're looking for more educational-like information in regards to futures and options, our partner exchanges, CME Group and CBOE Global, both have phenomenal education areas within their websites as well. So please stop by our partner websites for educational materials. Best case scenario is them. If you're struggling, email me. I'm happy to answer any of your questions at sean.smith@lseg.com. Mark, thanks for having me on the show today. It's been one of those great shows once again.
It was a pleasure as always, Mr. Smith. You know where to go. FTSERussell.com is the place to go. Give him a follow on the old Twitters as well, at FTSERussell. And you know where to go if you want more of these reports or research and education on all things futures and futures options. It's CMEgroup.com/TWIFO or /TWIO. We'll get you to our reports. You can certainly sink your teeth in there. It doesn't have to be just during showtime. It's all week long. These reports are active for you. So you can go there, kick the tires, and light the fires. You can't beat the price. It's free. And it's data that, as our listeners say, is much needed in the ignored futures options realm. So get the data. They're giving that to you. Get it while the getting's good. CMEgroup.com/TWIFO or /TWIO. And on behalf of myself and Mr. Sean, everybody over there in FTSE Russell land, of course, everybody over there in CME land, I want to thank all of you out there for downloading, streaming, subscribing, for listening live, for voting in our polls, for sending in such great questions, for reviewing our content, for all of the newcomers out there. We love you all. We'll see you back here tomorrow noon Central, 1 p.m. Eastern for volatility views. Then it all kicks off again on Monday with the option block all the way through to Thursday. And another episode of This Week in Futures Options.
This Week in Futures Options is brought to you by QuickStrike, options pricing and analysis software. QuickStrike offers powerful and flexible options analysis and pricing tools via an easy-to-use web-based interface. View prices on outright options or spreads with comprehensive page-level analysis controls. Build trades, manage risk, or explore historical volatility. QuickStrike has you covered, with market data reports ranging from open interest to the term structure of volatility. QuickStrike is the perfect addition to your trading toolkit. Learn more about QuickStrike at bantix.com. That's BANTIX.com. And don't forget to follow us on Twitter at QuickStrike1. That's QUIKSTRIKE1. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.